Hey everyone, welcome back to Corporate Decoder. Today, CSB Financial Inc. CSBA just filed a 10K, and I'm seeing a huge signal about their business transition. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing tells the story of a community bank making a big leap into public markets, and it really shows us how they are setting themselves up for the future. So what we have here is a report from CSB Financial Inc., which is the parent company of Community Savings Bank. They have just completed their initial public offering, which is a big step. This means the bank has officially switched from being owned by its customers in a mutual company to being owned by shareholders like you and me on the stock market. This is officially happening on the 29th of July 2026, and their common stock is expected to start trading on the 30th of July 2026 under the ticker symbol CSBA on the OTCQB market. This Form 8K is essentially an announcement that major events have occurred and they are informing the public and the CS about it. CSB Financial Inc. is the company that owns Community Savings Bank. Think of the bank as the place where people do their banking with savings accounts, loans, and things like that. And the company CSB Financial Inc. is the entity that owns the bank, and now it is publicly traded on the stock market. They were incorporated in Maryland, and their IRS employer identification number is 41-4,994,538. The big news here is the completion of their initial public offering. This is part of a conversion from a mutual to stock ownership. This means the bank is no longer owned by its depositors, but by public shareholders. This is a massive change for any company. It can bring in new capital for growth, but also introduces new pressures and expectations from investors. The fact that their stock is expected to start trading on the OTCQB market means it is going to be available for people to buy and sell on a public exchange, although OTCQB is generally for smaller or newer companies compared to major exchanges like the NASDAQ or New York Stock Exchange. Now importantly, CSB Financial Inc. is choosing to be classified as an emerging growth company. This designation comes with certain benefits under CC rules. It means they can take advantage of relaxed reporting requirements for a period of time. For example, they do not have to provide as much detailed financial information in some of their filings compared to larger, more established companies. This is common for companies going public as it helps to ease the transition. They have also elected not to use the extended transition period for complying with new or revised financial accounting standards, which means they will adopt these new accounting rules sooner rather than later. This part of the filing confirms they issued a press release on the 29th of July 2026. This press release is not included in the text here, but it is filed as an exhibit, and they are referring to it as containing more information about the completion of their initial public offering and the bank's conversion from mutual to stock form. It basically says everything we are talking about here is officially announced and contained within that press release. This section lists the documents that are being filed along with this Form 8K. The most important exhibit here is Exhibit 99, which is the press release dated the 29th of July 2026. This is the document that details the completion of their IPO. They are also including the cover page interactive data file, which is essentially a machine-readable version of the first page of the report. The filing is signed off by John E. Essen, the President and Chief Executive Officer of CSB Financial Inc. Dated the 29th of July 2026, this signifies that the company leadership is attesting to the accuracy of the information provided in this report. Looking at this filing, the story here is a community bank transitioning to a public company. This is often done to raise capital for expansion or to provide liquidity for existing owners. For investors, this means a new opportunity to invest in a financial institution. But with that comes the inherent risks of public markets and the specific challenges a bank might face. The OTCQB market is a good starting point, but it is important to watch if they can grow and eventually move to a larger exchange. The classification as an emerging growth company means they will have some flexibility in reporting for a while, which can be good for managing costs. But it also means investors need to be a bit more diligent in understanding their financial health, as disclosures might be less extensive than for larger filers. The key event here is the IPO and the conversion from mutual to stock ownership. This fundamentally changes their capital structure, their governance, and their operational focus, moving from serving customer depositors' interests to maximizing shareholder value. This is a critical pivot point for any institution. The risk I am watching is how well they navigate this transition, and if they can attract and retain investors on the OTCQB market while building a track record for future growth. That is my take. Stay decoded. If you found this breakdown helpful, please hit like and subscribe for more. You can also join our Discord community linked in the description.